Making money as a trader is easy when you have a stupidly simple trading strategy. And in this video, I'm going to be breaking down the exact stupidly simple trading strategy that my members collectively made hundreds of thousands of dollars in verified trading profits last year alone, trading this one strategy that you're seeing right now. As you can see, there are 5 steps that make up this strategy. And this is a trade executed from yesterday. Stupidly simple trading strategy. And I'm going to break it down from beginning to end. And by the end of the video, you will have this strategy to use for this year. Okay, so this is the strategy I'm going to be breaking down. This is the exact trade that covers this entire strategy from beginning to end. And I'll walk you through step by step. You can see here we have 5 steps. Step number 1 is daily bias, Asia session sweep, structure shifts, order blocks, and liquidity targets. So starting with the daily bias, this is a really simple concept. What we want to be doing to establish a daily bias, and by the way, a daily bias simply means that you are biased that day for which direction price will trade. Should I trade higher or should I trade lower? Should I look to buy this market or should I look to sell this market? That is the first question you need to answer for yourself. And once you have a clear bias, everything else becomes so much more simple. The way I establish a bias every single day, as well as all of my inner circle members, is by using the 15-minute structure. And the 15-minute structure is simple. You take a swing high, you take a swing low, then you find the next high or low, and you find the next high or low. Now notice one thing is very simple here. We are literally making lower lows and lower highs, right? Lower low, because this low is lower than the previous low, and lower highs. This high is lower than the previous high. So we are in a bearish trend, right? Price is trading lower. So at this point, you would be looking to short the market. Then what happens is the market structure shifts. And so we go through a change of character, which is essentially when the high that was currently in control of the market. So at all times, there is a high or a low that is in control. And the way you can understand who is in control is by identifying the strong structure. The strong structure is the most recent swing point that has broken structure in a direction. For example, in this instance, this is, if we don't see any of this, this is the strong structure point because this is the most recent high that broke below the previous low and put in a lower low. So this becomes what we call a strong high. This is the high that's in control. A structure shift or a change of character happens when a high or low, but in this example, a high that was in control gets taken out. And that becomes a change of character. When we have a change of character, the bias shifts from being bearish to being bullish. And now we have a higher high, a higher low, and a higher high. And so if you were coming into the market on this day, and this was the price action that you've seen, you would be looking for one thing and one thing only. You would be looking for a retracement and a continuation. And all your job is to do as a trader is to identify this low, find out how you can get involved at this low. You want to buy here and you want to sell here. So you want to exit this trade down here. That's all you have to do. Like trading doesn't have to be any more complicated. You establish a trend. In this example, we have a low down here, right? And we have a high up here. We've established a trend. If I was coming into the market on this specific day, my daily bias would be bullish. So I would be looking to be a buyer. And I want to be a buyer when this low is put in the market. I want to buy in here. And I want to get out of that trade here. That is all I do. And that is all I teach my inner circle members to do. It is literally that one thing. And so we remove all of this and we go to just before this trade was executed. So just before London session opens, this is the market. What you will very clearly see is that price was putting in a series of bearish structure. Right? Continuously, we were putting in low, high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. This is all you can see. The high that is in control is this high here because this is the highest point that price reaches before we break the previous low, right? As you can see here. Before we break the previous low, which is right here, when we break this level, the high that broke it is in control. Now, some of you may be asking, why is this not a low and why is this not a high? Because these lows and these highs don't meet my specific criteria to be considered as a pullback, which is something you need to have mechanically to tell you every single time what is a high and what is a low. And so this is the high and this is the low. So if you were trying to trade on this specific day, yes, you would be looking for shorts, and yes, you would have been wrong. However, fortunately for us, this is outside of our trading window. We only trade inside of this green box and this orange box, right? Keep that noted. So price does this. Now, what is this? This is a change of character. Notice that price was bearish, and we are continuously respecting these areas of price, right? Price puts in a low, high, low. Entries, price goes lower. Again, price coming back into these levels. Price going lower again, coming back up, going lower again, right? Now we've shifted. So now we were bearish, and now we are bullish. And so we skip back to where we just were. Notice what happens again. We put in a higher high, higher low, and higher high. Now, you may be asking the question, why is this not the high, and then this not the low, and then this the high again, and now we would be bearish? And the answer to that is simple. This is a liquidation. You can see here, right, this is a very important piece of information. When you have a high, price must break above that high and have a candle closure over that high. For example, here we have a high. We come across, we break through it, and we close above it. We have a high. We break through it, and we do not close above it. When price does not close above a high, but it trades above the high, it leaves a wick. A wick, 9 times out of 10, is a liquidation, meaning that price is fishing in this area and is likely to contain a reversal, right? You can go and search this for yourself. When price wicks above a high, like this, it usually always ends up selling off. When price wicks below a low, like this, it almost always ends up buying back up. So when you see these wicks above highs, do not trade them no matter what anybody tells you. They are a trap. And so at this moment in time, this is the low that's in control. And this is the high that is weak. And so all I would be expecting is that we are going to trade above this high. That's it, right? Now that brings us to here. So this is around 1 a.m. Eastern Standard Time. My London session starts at 2 a.m. So around an hour away from my market open. And my daily bias for this day is very simply bullish. So I am looking to be a buyer. That is step number 1. Step number 2 is what I call Asia session sweep. People always ask me, Lewis, what is this blue box on your charts, right? What is this and why is it there? This blue box represents my Asia session. And this can always be found at 8 p.m. to midnight Eastern Standard Time. So go to TradingView and put a blue box over 8 p.m. to midnight Eastern Standard Time. And what I will tell you is that with a high level of certainty, we take out Asia session low and Asia session highs consistently daily, depending on the direction. Sometimes we even take both sides. Like if we look at this, for example, right here. Notice that here, Asia low, Asia high. London takes out the lows, New York takes out the highs, right? Let's go to the day before that. Notice that we have the high in here, it gets taken out, and then the lows get taken out. And so after being in this market for years, right, the lows get taken out. In this example, perfect manipulation. Highs get taken out, reversal, lows get taken out. After having traded these markets now for the better part of 6-7 years, I have found that Asia session gets consistently swept. And because I know that as a probability, that is something that I decided to add to my trading system. And so what I wait for after I have my directional bias, which is always M15 structure. So here is my low, here is my high. My daily bias is what? If you said bullish, you are correct. The problem is I know that when we are bullish, Asia session low often gets taken. So wouldn't I be a fool if I was trying to buy at this Asian session low when I know that statistically speaking, this Asia session low gets taken? Yes, I would. So my second rule is as simple as wait for the Asian session low to get manipulated. Just like this. That is my rule number 2. And so if we come back into price, first and foremost, we have our daily bias, which is bullish, right? And then we have our Asian session low. So what do I need to do? I wait for the manipulation of this low because I know that is statistically likely to happen. We get our Asia sweep around about 1 a.m. So just before my London session open, we're getting this sweep of Asia session low. That is a non-negotiable for this specific variation of the strategy. Now, honestly, it took me a long enough time to become a consistently profitable trader. And I would not have been able to do that if I didn't have the clear, built out roadmap and blueprint that I finally developed. And so below this video, I'm going to leave you another video completely for free. It's a 40-minute masterclass that you need to watch if you're serious about becoming a profitable trader in this year. It's going to take you from exactly what you need to do step by step in order for you to achieve success in these markets. I highly recommend it, and it's completely free. So now we've had step number 2, which is our Asian session sweep. So we can go ahead and remove that. Now we have structure shift, order block, and liquidity target remaining. Next is our structure shift. We've had a daily bias, which is bullish. We've had an Asia session sweep, which was down here. Now we need to identify our structural shift. And this for me is something that was a complete game changer. In this scenario, our daily bias is bullish, correct? But from this high and up until where we are right now, I think that you would agree with me if I told you that price was moving pretty bearish, right? I mean, price is actually right now putting in lower levels of price. So what I need to see on a lower time frame is this shift from being bearish to bullish. And so if I go to a 1 minute time frame, for example, and we look at the same price action, right? Nothing has changed. The 1 minute time frame will tell you that, we are essentially bearish, right? Without getting you a little bit too confused. The 1 minute time frame is bearish. And the current structure for the 1 minute time frame at this moment in time is we put in a low, we put in a high, right? Puts in a low. And so this is the high and this is the low. So at the moment I am entering or getting ready to get into my London session, the 1 minute time frame is bearish. I need to make sure that that 1 minute time frame shifts to go to bullish, because what this is telling me, this is the market right now. Sellers are dominating the market right now. All I have is the idea that buyers are going to win this day, right? Which is a daily bias. But there is the rest of the day and there is right now. And so what I need to see is I need to see right now align with what I think is going to happen for this day. If those two don't align, I don't do anything. And the way that I do that is a lower time frame, right? A 1 minute time frame structure shift. And so you can see, right? We're putting in these lower lows, lower highs, and lower lows. And so all I do is simply wait for a structure shift like this. And notice that this is the 2 a.m. So now my London session has opened, and we have opened with a structure shift. We were bearish, and now we're bullish, right? The same concept, just on a 1 minute time frame instead of a 15-minute time frame. Imagine you're trying to thread a needle, but instead of being able to see what's happening, you are ultimately zoomed really far out. And you're trying to thread this needle, but you can't really see what's happening and what's going on. This structure shift on the 1 minute time frame is like doing that with an eye scope. And so you have one of those little scope things in your eye that enables you to see very clearly the detail of what exactly is going on. It becomes 10 times easier to thread that needle. The same is true when it comes to executing trades based on a 15-minute time frame by going to the 1 minute time frame and waiting for a structure shift. And that is all step number 3 is. Now what we need to see is an order block. And simply put, for those of you who don't already know what an order block is, what you want to imagine is that the market is always going from range to impulse, to correction, to range, to impulse, to correction, to range, to impulse, to correction, right? This is how the market moves. What you want to identify is a range in price before an aggressive expansion. That is going to give you an area of demand, which is commonly referred to as an order block, an area of price that is protected by large players. And what we want to do is we want to identify this level. And when we get an expansion, we know from probabilities and statistics that price is likely to come back to this level, and also gives us an edge if this level holds and expands away from it, right? That is basically what our edge is built off. And so if we look at this price action here, and I go to a 5-minute time frame, typically use my order blocks in a 5-minute time frame, what do we see? We see that we've had daily bias, right? These are the smaller details that make your entries better and your risk to reward higher. The most important thing is your daily bias and your Asia session sweep and your structure shift. Now we're getting into the kind of smaller details. So what we can see here is that we had this aggressive push out, right? So we have real momentum. But before we get this aggressive push out, notice that price is just sitting at this level for 5, 10, 15, 20, 25, 30 minutes before we get essentially like a 5 to 10 minute expansion. So we're ranging before an expansion, which is exactly what I just spoke about. These ranges are what we refer to as quote unquote order blocks. And so we want to just identify this range, which is a demand range, from the high of the range to the low of the range and pull it across. This is going to be your order block. And this is what you're going to use for your entry. And so now all we do is we take our long position. We put it at the high of the order block and we put our stop loss at the low of the order block. Now we need to understand where should we be targeting for this trade. And for me, my first target for every trade is liquidity, right? First and foremost is liquidity. So we go back to our 15-minute time frame, which is our major time frame that we're framing this trade idea based off of. And you'll notice something, right? You'll notice that we have this developing trend line building on the 15-minute time frame. And so for me, this is quote unquote an area of liquidity. And so we can use this level in here, or we can simply just use the high of this trend line. And we can use that as one of or the target for this trade. And if you come back to the 5-minute time frame, that is what we call a liquidity target. When you're taking a trade, you always want to be exiting the market based off of some type of liquidity. Could be a session high, a previous day's high, a previous day's low, equal highs, trend line highs, just an area of price that we are likely to trade into. That is literally all it is. And then it's as simple as placing your trade and letting the market do its thing. And regardless of the outcome, holding your trade. That's one of the big things what it takes to be a profitable trader. And again, make sure that you check out that video that I've left for you in the description. It's going to make your journey to becoming profitable 10 times easier and 10 times faster. Enjoy.